Lockheed Martin Q1 profit falls as F-16 and helicopter programs drag. Lockheed Martin opened 2026 with flat revenue, but a notable earnings drop, reporting first quarter sales of $180 billion and net earnings of $15 billion, down from $17 billion in the same period a year ago, as production problems on the F-16 and CH-53K programs weighed on results across two of its four business segments. The company reported results for the quarter ended March 29, 2026 on April 23. Diluted earnings per share came in at $644 compared to $728 in the first quarter of 2025. Cash from operations dropped sharply from $14 billion in Q1 2025 to just $220 million this quarter, with free cash flow swinging to negative $291 million from a positive $955 million a year earlier. The company attributed the cash decline primarily to higher working capital driven by the timing of billing activities. Capital expenditures for the quarter reached $511 million. Lockheed also paid $816 million in cash dividends and repaid $10 billion in scheduled long-term debt during the period. Despite the profit and cash flow miss, CEO Jim Taiclet reaffirmed full-year 2026 guidance. The company projects annual sales of $775 billion to $800 billion, business segment operating profit of $8,425 billion to $8,675 billion, and free cash flow of $65 billion to $68 billion. Diluted earnings per share for the full year are projected between $29.35 and $30.25. Taiclet framed those targets as representing approximately 5% sales growth and 25% operating profit growth year-over-year. The quarter's results split sharply across Lockheed's four business segments. Missiles and Fire Control was the standout performer, posting sales of $3,649 billion, up $276 million or 8% from Q1 2025, with operating profit rising $35 million to $500 million. Aeronautics and Rotary and Mission Systems both declined, while Space grew on revenue, but saw operating profit fall significantly. Aeronautics, the company's largest segment and home to the F-35 and F-16 programs, recorded sales of $6,953 billion, down $104 million from a year ago. Operating profit dropped $101 million or 14% to $619 million, pushing operating margin down to 89% from 102%. The primary culprit was the F-16 program, which generated $125 million in unfavorable profit adjustments tied to production performance and development delays. The C-130 program added $55 million in net unfavorable adjustments, attributed to ongoing challenges integrating components from suppliers facing diminishing manufacturing sources and associated delivery delays. Partially offsetting those hits, the F-35 program contributed $130 million in favorable profit adjustments driven by higher sustainment contract volume, a signal that the program's long-term support business is generating returns even as production remains under scrutiny. Missiles and Fire Control's growth told a different story. The segment's revenue increase was driven by a $190 million ramp-up in integrated air and missile defense programs, specifically existing PAC-3 contracts, alongside $75 million in higher tactical and strike missile sales spanning the Joint Air-to-Surface Standoff Missile, the Long-Range Anti-Ship Missile, and the Precision Strike Missile. Those are exactly the systems that have seen surging demand from both U.S. and allied customers, and the numbers show that demand translating into revenue. Rotary and Mission Systems posted sales of $3,991 billion, down $337 million or 8% from Q1 2025. Operating profit fell $98 million or 19% to $423 million, with margin contracting to 106% from 120%. Lower volume on radar programs and unfavorable profit adjustments on both the CH-53K King Stallion heavy-lift helicopter and the Seahawk naval helicopter drove the decline. The segment also lost the benefit of a $50 million intellectual property license cost recovery that had boosted Q1 2025 results. Effective January 2026, Lockheed restructured the segment's internal organization, renaming its Integrated Warfare Systems and Sensors line of business as Sensors Effectors and Mission Systems, and its C6ISR line as Mission Integrated Command and Control. The Aegis Combat System and the River-class destroyer program moved to the renamed Command and Control Unit as part of that realignment. Space recorded sales of $3,428 billion, up $223 million, or 7% from Q1 2025, driven primarily by higher volume on the Fleet Ballistic Missile and Next Generation Interceptor programs. Operating profit, however, fell $98 million, or 26% to $281 million, largely because Q1 2025 had included favorable performance adjustments upon completion of certain commercial civil space programs that did not repeat. Margin compressed from 118% to 82% as a result. Takelet's public statement highlighted two developments he presented as evidence of the company's strategic position. He cited the Artemis II mission, during which Lockheed's Orion spacecraft carried crew farther from Earth than any crewed spacecraft before, as validation of the company's space capabilities. On the defense side, he pointed to what he described as a series of framework agreements signed in Q1 with U.S. government leadership to accelerate and scale munitions production, specifically naming Advanced Patriot Missiles THAAD and PRSM. Takelet said those agreements are designed to increase production rates of those systems by 3 to 4 times current rates, supported by multi-year demand commitments that would justify investment in production infrastructure, supply chain expansion, and workforce growth. The divergence between Lockheed segments in Q1 2026 maps directly onto where defense investment is flowing. Missile defense and precision strike munitions are in high demand. Legacy fixed-wing production programs and helicopter lines are absorbing the friction of supply chain stress and program execution challenges that have accumulated across the industry. The company's reaffirmed full-year guidance suggests management believes the first quarter's pressures are timing-related rather than structural, but the F-16 and C-130 program adjustments taken together represent a meaningful drag that will need to reverse for those targets to hold. $18 billion a quarter, a missile production ramp measured in multiples, and a spacecraft that just carried humans farther into space than any crew before. Lockheed Martin is operating at the intersection of nearly every major defense and space priority of the moment. Whether the bottom line catches up to the top line is the question the next 3 quarters will answer.